Hi, I'm Devin and welcome to the last Money Minute for 2021. So wow, this year was another unprecedented, uncertain and unbelievable year. And as we all start to wind down and enjoy the festive season, I thought it would be interesting to look back over some of the important events that we've been through over the last year. Importantly, global growth came out higher than expected, with the US and China as an example, expecting 6% and 8% respectively recoveries in those economies. South Africa slightly less, but still higher than expected. Supply chain constraints were an issue, although this looks like it's starting to unwind and goods are flowing more freely around the continents and the planet. The China clampdown on certain industries like education and technology took the markets by shock. As a result, we saw investors being very cautious in dealing with those sectors as well as the country as a whole. Probably the biggest risk for investors was inflation, and this is exceeding expectations and not looking to be as temporary as initially expected. As a result, we've had central banks around the world tighten monetary policy, which means raising interest rates. The US Fed is expected to start this next year, and the South African Reserve Bank has already raised once. Unfortunately, we also carry some social and economic scars from the July riots and the subsequent rebuilding that needs to happen from there. Now, the South African equity market and tax revenue were beneficiaries from the commodity boom this year, which is fantastic. And this saw the JSE up over 20% for the year, with US markets up similarly. Now, it's important to ask the questions, what will next year look like? Now, COVID has taught us the folly of forecasting, but there are some existing trends already in place that could play out in the financial markets next year. A couple of these could be the following. China is likely to speed up its quest for global dominance. It's continuing to implement its policy of common prosperity, and this could make global trade and investment into China quite complicated. But because they're a global dominant economic force, it's an issue investors must consider and deal with accordingly. Secondly, it's likely that investors will see an acceleration in the exponential technology progress that we've seen to date, and they should look to gain exposure to some of these dominant technological themes, examples of which are things like blockchain, AI, the metaverse, quantum computing, and cybersecurity. Another theme is the crypto evolution, which is likely to accelerate, and it's set to become more of a permanent feature of investors' portfolios as institutional adoption and the regulation catches up. A further theme is support for ESG, environmental, social, and governance themes, as well as green technology. Investment themes here could include green metals and decarbonization, and they are likely to find increasing support with investors going into the future. Investors will have to grapple with higher inflation and higher interest rates. Now, the challenge is to protect their portfolio from these forces, and this could be done potentially by looking at investments into gold, silver, certain crypto assets, and real assets such as infrastructure. The further economic impact from COVID is unlikely. Now, while there may be further waves, thanks to medical advancements, the likelihood of further lockdowns is less likely. So in the last 2 years, global markets, if they've taught us anything, it's that investors who have remained invested in quality, well-diversified portfolios through the volatility have been rewarded. It is likely going forward that this will be no different. Take care, and I look forward to catching up with you in the new year.